Hello, my name is Andy Nielsen. I'm a Deputy Auditor of State with the Auditor of State's Office. We're here this afternoon to do a little webinar on tax abatement disclosures. First slide we have is an overview. This is what we're going to talk about. We're going to talk about background information, why GASB77 is there. It was issued in August of 2015 and is effective for years that end June 30, 2017. We'll also talk about scope and definition. We'll talk about some general disclosure requirements. We'll talk and walk through a sample note disclosure for a city. And then Ted Nelson, this is going to help us with the local government abatement calculator. So getting into it, the background information, each year billions of tax revenues are abated by thousands of governments every year. These revenues do not show up in the financial statements. If the revenues are foregone before the revenue is collected, obviously it's not there to account for. So there's no receipt, there's no disbursement, there's no revenue, no expenditure. Yet, since they're sometimes large amounts, this can have a significant impact on city finances. GASB 77 requires reporting in a footnote disclosure some of this foregone revenue. GASB, as they deliberate GASB statements, they look at what's called a concept statement. GASB's concept statement number 1 has 3 categories that are impacted by tax abatements. And those 3 are listed on the slide. Whether the current year revenues cover the current year expenditures. How is this important? Well, if we don't have all the revenue reflected in the financial statements, how will we know whether the current year revenues would have covered the current year expenditures? The second one is where a government's financial resources come from and how it uses them. If some of the resources are not included in the financial statements, we don't necessarily know where they would have otherwise come from, and whether or not a government's financial position has changed over time. The statement requires disclosures by both the government with the tax abatement, and it also requires governments to report abatements by which that government is impacted by some other government's tax abatement. And it is effective for this fiscal year, the fiscal year ending June 30, 2017. Scope and definition. GASB 77 does not include all transactions that reduce tax revenues. The emphasis is on the substance of the arrangement, which meets the definition, but not just the name or the form. You have to apply the criteria that are included in this definition, and I'm going to take a little bit of time walking through this. The tax abatements that are being impacted by GASB 77 are those that result in a tax reduction that results from an agreement between one or more governments and an individual or entity in which one or more governments promise to forego tax revenues to which they're otherwise entitled, and the individual or entity promises to take a specific action after the agreement has been entered into that contributes to the economic development or otherwise benefits the government or the citizens of those governments. So here's some of the key distinctions. There must be an agreement. The agreement can be written or can be implied. It must be between one or more governments and an individual or entity, not between 2 governments. The action must be preceded by an agreement by the individual or entity. So in other words, if you do something and then enter into an agreement, that would not be a tax abatement covered by GASB 77. And according to GASB, an application is an agreement. So if you have to apply for something, then that is an agreement. The purpose of the abatement has to contribute to the economic development or otherwise benefit the government or citizens of that government. And one of the things in talking with GASB about this is just living on the property after the application is not enough to be considered as an action. So, for example, if homestead is a homestead tax credit is not a tax abatement under this standard. So one of the things that I want to make a little bit of a distinction here, sometimes government has some things that they call tax expenditures. Those are generally broad policies that the government institutes that they want to encourage some type of behavior. For example, in order to be able to help out municipal bond interest rates, they allow that interest to be excluded from income tax. They also, in some cases, allow military veterans to be exempt from property taxes. These are not considered tax abatements because the people don't have to do anything after the agreement. There's also something like a tax deduction for charitable giving or for interest, mortgage interest on your home. Again, those are broad things that you really don't have to do anything except for, in the case of the home mortgage expense, live in the property. So it does not include broad basic tax expenditures like energy efficient appliance credit and income taxes, homestead tax credit, or any of the broad basic expenditures that are more characterized accurately as aspects of a government's tax policy rather than individual decisions to accept less revenue for something of value from the entity or individual. Here are some of the features of economic development: increasing the property or other tax base, revitalizing distressed local economies, and retaining or attracting jobs, or companies in particular industries or a specific company. Those are things that are often features of economic development. One of the things that we did in trying to get our arms around this, at first blush, GASB77 seemed pretty simple, but after we dug into it, it looked like it was going to be fairly complicated. So we pulled together a committee with some representatives from the Department of Management, Carrie and Ted Nellison. We asked for a county representative, who was Mike Elbers. We asked for a city representative, who was Carrie Cruz with the city of Des Moines. We asked for somebody from a school district. Nick Gerhardt from Des Moines Public School volunteered for that. We also had a couple people from the Department of Revenue join us. We had someone from the Attorney General's office join us, as well as a couple people from the Auditor of State's office, and two bond counsels, names that you would probably recognize pretty readily. I guess there were three actual attorneys that showed up at least a couple of the meetings. And we went through and we tried to wade through as many of the agreements as possible. For example, with the Department of Revenue, we went through all the state tax credits and tried to determine, is there an agreement that was required? What do people have to do? When do they have to do it? And we really got it weeded down to just a couple different programs. And we did the same thing with some of the local things. We had a Polk County assessor come in, Randy Reparker, and he led us through a very thorough analysis of the various programs. So in just a couple of minutes, we'll kind of shake out where we ended up. The timing is essential. The tax reduction can occur before, during, or after fulfillment of the individual or entity's promise, as long as it occurs after the agreement has been entered into. So the agreement must proceed to action, and if it doesn't, then it's not covered by GASB 77. So what's in and what's out? From a state standpoint, will be the high quality jobs program, the new jobs training, and those are primarily for the first one is primarily for the state of Iowa's CAFR. New jobs credit will be primarily for community colleges, and the last one, tax increment financing, will be the one that cities are most likely going to have to deal with, and I want to refine that a little bit later. But if you have TIF, you're going to want to take a good look at this. Almost everything else is out. There are some Chapter 404 urban revitalization that could be applicable if an application is required before action. Chapter 404 does not require that, but some cities have by ordinance required an application but before you start doing the revitalization. If the application is required, then you're going to want to take a look at that, and it'll probably be in as well. Um, yeah, those are the programs. So, and one point I want to make now, and then I'll make again a little bit later, is not all TIF is going to be in. For example, City ABC may, as a part of a TIF project, agree to put in a road, and the city itself goes out and issues general obligation bonds and pays those general obligation bonds out of TIF proceeds. That is not a tax abatement because they didn't enter into an agreement with anybody else. It's their own debt that they're paying. However, if the city, if a developer put in a road, and after entering into the agreement that the developer said he would put in a road, if the city rebated some of his taxes, then in that particular case, that would be a tax abatement. General disclosure principles: a government is required to disclose information separately for its own tax abatements and abatements entered into by other governments that reduces the reporting government's entities. So, and I will show you an illustration of a note in a few minutes that kind of walks you through this. The disclosure may be for individual agreements or may be aggregated by type. I will tell you that if I were doing it, I probably would not. I would aggregate them, and the reason is that'll keep it as simple as possible. If you do show the disclosure for individual agreements, you have to scope those. You have to set a threshold. For example, everything over $1,000, you would show individual names, and then everything under $1,000, you do in total, or 10,000 or 100,000 or whatever. It would be much simpler if you just did the whole thing. And for other government's abatements, you just organize them by the governments entering into the agreements and then the specific tax abated. General disclosure principles: the government should disclose. The disclosure should commence in the period in which the tax abatement agreement is entered into and continue until the tax abatement expires. Now, that's the general rule. So if you have a tax abatement program that's going to last for 10 years, you'd have 10 years worth of disclosure. There's one exception to that. If you make some agreement, some commitment other than that as a part of the agreement, for example, if you put in a road around the location and you do the road in year 2, you would only have to disclose the road for years 1 and 2. Once the road is put in, then you could stop disclosing the commitment to do so. Here's a table form of the required disclosures for the government's own abatements and other governments' abatements, and it continues on for 2 pages, I think. You can see that it goes through and tells you what is the name of the program, what is the purpose of the program, what tax is being abated, where do you find the authority to abate those taxes, what are the eligibility criteria, what mechanism is being used to abate those taxes, are there any recapture provisions? For example, if you don't do something right, is there a way to claw back those taxes that otherwise have been foregone? And what type of recipient commitments are there? Those are all disclosure about by the government's own. You also disclose the dollar amount of tax abated, the amounts received or receivable from other governments associated with those. Other commitments by the government, you want to disclose those and a qualitative threshold if you do the individual disclosure. And if for some reason there's something that you have a prohibition against showing, there's some confidential information, you have to explain what you have not included. So that's the first column of disclosing the things if it's your own abatement. And we'll go back for the other government, the far right column. If it's some other government's abatements, then you have to say the name of the government, the tax being abated, the dollar amount of the tax abated, and then if there's any amounts received or receivable from other governments, such as, I'm not going to show you the example today, but schools have some of their the taxes that they don't get are backfilled by the state's general fund for the first $5.40 per $1,000 of valuation. Schools get a check from the state's general fund to backfill part of that, and so schools disclosure will include an extra paragraph that discloses how much that is, and the calculator that Ted has put together gives you the amount for that as well. And if you do individual disclosure for those, you have to say what the scope is, and also if there's any information you can't disclose because of confidentiality reasons, you have to do that as well. If you have component units, blended component units tax abatement agreements that reduce the primary government's tax revenues, you do the disclosure in the same manner as the primary government would do its own tax abatements. And for discretely presented component units, the tax abatement agreements that reduce the tax revenue should be evaluated to determine if essential for fair presentation. So if it's determined to be essential, then disclose the information for the primary zone tax abatements, and if not essential, disclose the information required for other governments' tax abatements. And that's according to GASB77, so that's kind of how that works. Here's a sample footnote, and just to help you better understand the disclosure requirements, we're going to kind of walk through this GASB77 note. The GASB77 notes are included in the applicable sample reports on the Auditor of State's webpage. So there's a sample TIF tax abatement note in the cash basis city and the gap city. Also, the community college and hospital and county also have slightly different samples. So, and walking through this first paragraph is just the definition. It basically goes through and tells you what the elements of the tax abatement definition are. It defines tax abatements as a reduction in tax revenues that result from an agreement between one or more individuals or entities and one or more governments, in which one or more governments promise to forego tax revenues to which they're otherwise entitled, and the individual or entity promises to take a specific action after the agreement has been entered into that contributes to economic development. So it's a standard definition right out of GASB 77. The next paragraph has a lot of information crammed into it, and it's supposed to have a brief description. Okay, the brief description here is that the city provides tax abatements for urban renewal and economic development projects with tax increment financing. Okay, it talks about the mechanism. So how are these tax abatements being distributed? And it talks about that here. You can see it could be through a rebate. It could be through paying a grant, or it could be from the city paying a specific dollar amount to a developer. The next item that's included is what is the legal basis for this? And there are two chapters of the Code of Iowa that are cited here, Chapter 15A and Chapter 403 of the Code. They talk about the tax increment financing, and it ties it into economic development. The last sentence of this paragraph deals with the commitments. Now, you don't have to do negative disclosure. I did in this particular case just to make sure that we don't miss it. But if there are no commitments, you wouldn't have to say there are no commitments. But it might not be a bad idea to do that anyway. But if you committed to put a road in, say in addition to another part of the agreement includes the city putting in a road to do from here to there of the estimated cost of whatever it happens to be. The next piece that we deal with is what are the taxes that are abated, the gross amount of the taxes that are abated by the city. With the dollar sign there, you just put the dollar amount in. So if the city's portion of the tax abated was $10,300, you put $10,300 of property tax under their urban renewal and economic development grant projects. So that takes care of the city's own agreements. And then the second part of that is if you've entered into any other agreements that are, if you're impacted by agreements that have been entered into by any other governments, this is where that would fit into. And in this particular case, the County of ABC had also done some urban renewal and economic development grants. So what you're looking at here, you just need to disclose the name of the entity that entered into that agreement, what the tax abatement program was, and the amount of tax that was abated by that particular county. So that pretty much walks you through the definitions and the footnote. Next, Ted is going to show us a tool for putting together information for each district.
Hello, this is Ted Nellis. I'm with the Iowa Department of Management. As Andy alluded to, we have a couple of different tools out on the Department of Management's website under the cities section listed under GASB77 resources that will assist in completing the disclosure requirements under GASB77. So the first of those tools is up on the screen right now. It is a GASB77 reporting master list. This is really a tool that is for any affected authority under GASB77. So a city or a school or a community college, for example, that has had revenue diverted away from it due to TIF rebate agreements or developer agreements or economic development grants. The affected authority, in this case we'll say a community college, can come in to this reporting master list tool and select their name from a list of options that will populate. In this case we will just select the Kirkwood Community College, and then it will outline for this affected party all of the different TIF using entities that should be sending them a disclosure for to help fulfill their GASB 77 requirement on their audit. As you can see, there's quite a lengthy list for community colleges, as there are inside their borders. There could be a lot of different TIF users. In the example that's up right now, the case of Kirkwood Community College, they should be receiving 52 separate letters from levy authorities who are who are diverting money away from them for use to pay a TIF obligations. Now that may or may not be to pay TIF rebates. If it is, say, the city of Vinton listed here at number 47, if they only use their TIF money to repay debt and they're not paying any rebate agreements or developer agreements or economic development grants, then they should send a letter to the community college stating that $0 in GASB 77 required disclosures need to occur. But we still do expect that all of the TIF users will be sending out a $0 letter, even if they don't have any reportable GASB 77 expenditures. They should still send out a letter that says $0 in diverted revenue for the given year. Again, this tool will be primarily used by the affected levy authorities. For any of the levy authorities who are TIF users who might have diverted revenue to pay a tax rebate, developer agreement, or economic development grant, we have this reporting letter generator tool on that same website. This is the tool where we're going to take the amount of rebate agreements, developer agreements, and economic development grants that were paid out during just fiscal 17 and figure out how much of that came from each of the individual affected levy authorities. So for this example, I will just select a city from the drop-down that has a couple of different areas. So in this case, I'll select the city of Altoona. They have 3 different urban renewal areas under which they could collect revenues currently. The first of which is the Altoona Urban Renewal. Now you can see Altoona Urban Renewal is in black, meaning that this is a urban renewal area under which TIF revenue was collected during FY17. The very next urban renewal area down, the Altoona North Urban Renewal, is in red and is italicized. What that tells us is that while this urban renewal area existed and was open for use during fiscal 2017, it did not actually generate any TIF dollars during FY 2017. So it will be omitted from any calculations that we do, even if we put a number in here. And for this example, I will put a number into that spot. Third one down, Altoona Southeast Urban Renewal, is also black, so it will be captured in our calculation. Down below is a list of all of the affected levy authorities who who should be receiving a letter from the city of Altoona in this particular example. So you can see starting at Broadlawns and ending with the state of Iowa. Some of these authorities, I should say, will receive letters, some will not. We decided that based on who does an audit yearly. The only entities that need to receive a letter are those who would have a GASB77 disclosure requirement. In order to have a GASB77 disclosure requirement, you have to be audited in that given year. So in this case, we will omit the Clay Township. We'll also admit the Polk, Clay County Fire EMS, and we'll also omit the state of Iowa, as the amounts reported to the state of Iowa will be immaterial, as they'll be fairly small. In aggregate, the state of Iowa only collects somewhere in the neighborhood of $470,000 in property tax during the year, so any amount diverted from them is going to be really small when compared with a $7 billion budget. So we will focus in on just the ones that will be needing a letter, and those will be the bigger entities like Broadlawns, because all hospitals are audited yearly. The City of Altoona, which gets audited, Des Moines Area Community College, Southeast Polk Schools, Bondurant Farrar Schools, as all schools are audited yearly, and Polk County, as all counties are audited yearly. They will be receiving letters, and this system will generate those letters for those entities. Now, the only thing that the TIF user has to do to use this system is select their own name. So in this case, I would be acting as the City of Altoona to report my TIF usage to other entities. So I select Altoona from the dropdown. It brings up my urban renewal areas. Then the only other thing I have to do is calculate how much payment in each area did I make for TIF rebate agreements, developer agreements, and economic development grants for the year. So in this case, for this example, I'll just say that in each area, I did payments of $10,000. So you could see, just like with the titling, the totals that I enter also they also are covered by a color. The black 10,000s under the Altoona Urban Renewal and the Altoona Southeast Urban Renewal will be accounted for and will be divided out and reported in a letter. The 10,000 that we paid out of the Altoona North Urban Renewal will be omitted, as no TIF revenue was garnered from that area during fiscal 17. So you can see, even though I entered $30,000 worth of payments on those individual slots, it totals to 20,000. This is as it should be, because it's only totaling up the black totals. Now, the down below, that $20,000 that we paid out in TIF rebate, developer, and economic development grant agreements is subdivided into where it came from, essentially. What revenue diverted from each of these purposes had gone to create that $20,000. So the totals below in the diverted revenue from each authority column right here, all of these will also total up to $20,000, as you can see at the bottom, so that we're in balance. We take the $20,000 worth of payments, we break it out by how much came from each of the levy authorities that we diverted revenue from. Also, there's a second column that says State Foundation TIF Backfill. So schools, while they do have money diverted away from them for TIF purposes, they do get a backfill through the school foundation aid formula. So the state makes an appropriation out of the general fund and pays the schools back for some of this lost revenue. You can see in the example of Southeast Polk Schools, there is $7,900, $7,955 that gets diverted away from Southeast Polk Community Schools and to the City of Altoona to pay those rebate agreements. But this school district then gets paid roughly $2,900 from the state of Iowa in order to make up for that diverted revenue. So it doesn't get a full reimbursement, but it does get a partial reimbursement, and the school district will need to report that as well. So we include that on the letter. Now, on the Letters tab, we'll skip over to the Letters tab next. All of the entities from that summary page that are audited yearly will have a letter generated for them. So in this case, that would be Broadlawns, Des Moines Area Community College, Southeast Polk School District. And if we drop down, Bondurant Farrar School District, Polk County, Des Moines Area Regional Transit. And then we'll have a second Des Moines Area Regional Transit, because the Des Des Moines Area Regional Transit is affected by both the rural and the inside the city of Altoona. So they have two different totals that they have to report to Des Moines Area Regional Transit, one for inside the city and one for just outside the city within the 2-mile radius. So each of these letters comes up automatically. It is automatically generated with the correct totals from that summary page already added into it. So you can see here it states that during the fiscal year ended June 30th, 2017, the city of Altoona provided tax abatements to a certain amount of individuals that came directly from money diverted from, in this case, it's Broadlawns. Below it'll show here's how much we paid in total out to those other entities that are reportable under GASB77. That was $20,000. But the important number for the entity is how much was taken from them to help make that $20,000 payment. In this case, that was $1,576 that was diverted from Broadlawns to the city of Altoona in order to make their required payments. Now, if we go across to a school district, we'll just go over to Southeast Polk here. So you can see this letter goes to Southeast Polk. We have all of the same declarations of how much was paid and how much came from the school district, but then it has one added wrinkle. Down in this paragraph below, you'll see that it's different than what goes to Des Moines Area Community College. It is a little bit longer and it includes a second figure. So it just states that, well, $7,900 was diverted from Southeast Polk Community School District's tax revenues in order to pay the TIF rebate agreements inside the city of Altoona. $2,900, and you can see right where my cursor is, there's $2,902.72 got paid back to the school district from the state in order to help soften the blow of that $7,900 being diverted. So they have to schools, like I said, they're not only required to disclose how much was diverted away from them in order to satisfy these private agreements, they also have to disclose how much money they got back from the state in order to satisfy, due to the lost revenue that went to satisfy those agreements. So they have two numbers that they need to report. One of them is up here very clearly on the line. The other one is in the paragraph below. So all that needs to be done with these letters is each entity, each TIF user needs to go in, generate the letters, type in the name of the person that will be responsible for fielding any questions or is responsible for disseminating this disclosure information up in this yellow box on the top left. Once it's entered there, it will flow through to every single one of the letters. So these can be just printed off and signed and then mailed out to each of the affected levy authorities. I would also suggest, like I said before, even if you have not paid any rebate agreements or economic development grants during the year, you should still send out a letter to any of your affected authorities just stating we did zero. We have $0 that needs to be reported for GASB77, because that just lets that entity know that they don't have to wait around for their letter, and it helps them get on with their disclosure a little bit quicker. Don't be afraid if it shows zero, that's fine. Just send out the $0 letter each year. And this is a disclosure that's going to have to be made yearly. Also, you will want to make sure that you keep copies of these signed and mailed letters for yourself, just for your audit trail, just as proof that you fulfilled your requirements under GASB 77 to notify the affected authorities of what the overall loss was to them due to the TIF. So before you mail out these signed letters, I would take a copy of them and put it in your audit file. Also for your audit file are the detail and calc detail audit tabs. So on the summary page, we just totaled up all three of those urban renewal areas. So you can see there's the urban renewal, the north, and the southeast. They all total up, and in this case, only 20,000 of the 30,000 was required to be disclosed under GASB 77. Down below, it just breaks it out in total across the three areas, how much goes from each entity. On the detail tab, it'll show you that same number, but it'll break it out by entity, by urban renewal area, so that we have another level of detail for those of you that are audited. It'll give you a nice audit trail. The calc details audit takes that one step further in that it takes the area and breaks that out into its separate TIF taxing districts. So now we can go down and see how much is going to each entity by tax district, and it will lay out the math that I used to get to that calculation. So this should be everything that your auditor, as a disclosing city or county would need to verify that all the work has been done and it's been done correctly. Be careful when printing the Calc Details audit page. It is very big. It will print out on something like over 100 pages if all is said and done. So you'll want to make sure if you go to print this out, you just select the pages that you need and don't go print all, because you will get a very, very large novel that gets printed out of your system. Be careful with that, and it might be just a good idea to save this file and just give this Excel file to your auditor, because it will give them everything they need in order to complete your audit trail. Otherwise, we suggest trying to get this done as soon as possible. If you could get it done by sometime in September, school audits are done earlier in the year rather than later. They try to get on those in August and September, so get those letters out to the school as fast as you can. This will be a yearly requirement, and we will update this reporting letter generated by July 1st of each year, as we're going to have to update it for just the yearly information. It's not a universal. It'll have to be a year-to-year change. Along with this webinar will be a Q&A document that was compiled at the IMPA session that we did on the GASB77 requirement. So in the same place where you downloaded this webinar, you should be able to also locate that question and answer document that should have a lot of the commonly occurring questions along with their answers from Auditor of State and Department of Management. If you have any questions on this sheet in particular, or any of the tools associated with GASB77, you can contact me, Ted Nellison, at the Department of Management. My email will be provided on the Department of Management's website. My phone number, you can also contact me by phone, is 515-281-3705. If you have any questions about GASB77 that are a little bit more in a structural or a theoretical nature, just about why it exists, what is it trying to achieve, that sort of thing, contact Auditor State at 515-281-5834, and you can talk to either Andy or Marlis, and they'll be able to help you out.